In its latest quarter, Canadian insurance company Manulife Investments announced new mutual funds to bring additional access to investors. So let's get more on this from Colin Simpson. He's the Chief Financial Officer at Manulife, and he joins us live now. It's good to have you. Thanks so much for joining us.
Yeah, thanks for having me. Happy Friday.
Happy Friday to you as well. It's great that the weekend is here. So if we're taking a look at these numbers that came out yesterday, Manulife reported a $1.5 billion in its latest quarter. But I noticed yesterday Manulife shares fell as much as 5% after reporting. So I'm wondering what you make of this latest quarter. How are you feeling about the report?
Yeah, look, we were really happy with our numbers. We saw earnings go up by 5%, and on a per share basis, up by 9%. We felt so confident in our outlook. We increased the dividend by 10% and announced a new share buyback of 2.5% of the company. So things went really well for us in the quarter. I think the reception to the results and the results in share price decline, some of that was due to softer Asia sales than we've seen in the past. And we'll always prioritize value over volume. So, we certainly weren't concerned with our Asia numbers. And in fact, Asia earnings were up 24%. The other area that got some questioning on the call was we saw $9.5 billion of net outflows in our asset management business. But this was largely a function of what we're seeing in the market and some very seasonal retirement fund flows. So when you put that to one side, really strong earnings growth out of our asset management business. So feeling really good about the quarter and looking forward to the near future, really.
Mm-hmm. And I don't want to take away from the positives of this report, but you did mention, sales in Asia, sales in Hong Kong in particular were down in Q4. Despite strong performance throughout the year in Asia. So what do you make of that? What drove those sales being down, do you think, in that quarter?
Yeah, and we sell in Hong Kong, we sell through a variety of different distribution channels. So we have our own agents that sell our products. We have banks, and then we have independent agents. And what we saw this quarter was that independent agent channel having a tougher period for us. And part of that is there's been some regulation change. And so there was a little bit of disruption in that channel. Now, the important thing to note is that our own proprietary channel and the bank channels have higher margins. So while sales were down in Hong Kong quarter over quarter, margin was up really strongly. Actually, we had a 52.4% margin. A year ago, that margin was 39.7%. So when you take a step back, actually, and look at the overall sales growth in Hong Kong for the full year, it was up 21%. And that sort of demonstrates that the comparator was quite tough for our Q4 numbers.
Manulife also announcing that you're launching ETF-based mutual funds. Tell us more about that and what investors can expect from that.
Yeah, we want to be the number one choice for customers. And so our drive is to provide customers how they want to invest, what they want to invest. We want to give them as broad an opportunity as possible to invest. And ETFs are a core part of our product offering. And in fact, through John Hancock, the brand that we trade in the US, and through Manulife in Canada, we're able to offer ETFs to give customers that extra choice. When you look at what we offer as a company, we go all along the credit, equity, and infrastructure spectrum. We've got a fully illiquid private credit business that we offer through our Converse Credit Partners. We've got semi-liquid through CQS based out of London. And then we've got the broad-based Manulife funds that offer public credit with a fantastic track record. So you put all that together on top of really great infrastructure opportunities, and you add the option for customers to invest via ETFs. And we think Manulife is a fantastic option for our customers.
You also announced a new global credit strategy, a couple of announcements yesterday. So tell us more about this strategy.
The global credit strategy, look, there's no real change to global credit for Manulife. We remain very constructive, and we pursue a diversified strategy. We operate in in 14 different countries in Asia. So having people on the ground really gives us that opportunity to assess credit as it happens on the ground, gives us great knowledge locally, and you put all that together, and we remain relatively constructive on the credit space. We do think that the economy will not necessarily struggle too much in 2025, 26, but it's certainly not going to be, a blowout year. And so things like the short-term short-term interest rate, we expect it to remain fairly constant until well into 2027 here in Canada, and that's really reflecting a credit environment that will continue to muddle along, I think.
Is that one of the headwinds, if you want to call it a headwind, that you're anticipating in 2026? I was going to ask you what challenges you see lie ahead for Manulife, and the economy kind of, as you say, like muddling along, maybe could be one of those potential challenges?
Yeah, the great thing about a life insurance company is that a lot of our earnings stream comes from business that we've already written. And so, when you think about some of the challenges, some of the macroeconomic challenges and the geopolitical concerns, that doesn't really impact our earnings per se. But should we see leakage of that into the credit markets, certainly I think the whole financial services sector could see that as a challenge. But I will say, we operate really in the public credit space, so quite high up in the quality spectrum. And in fact, we had a really good credit experience in the fourth quarter. And that's reflective of the fairly benign credit environment, particularly in the public space where we operate.
Okay, Colin Simpson, Chief Financial Officer at Manulife. That's all the time we have, but it was good to have you join us this morning. Thanks so much.